Steve Corney. Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
Janine, this podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Steve, today we're discussing a significant concern among Canadian homeowners. A recent survey by TD Bank Group highlights that over half of them fear that upcoming mortgage renewals could impact their living situation. Janine, that's quite a statement, isn't it?
Janine, it really is, Steve. According to the survey, 57% of homeowners believe their mortgage renewal could affect their living situation, which is a big worry for many families. With mortgage payments expected to increase for 45% of those renewing within the next year, it's no surprise that people are feeling uneasy.
Steve, absolutely, Janine. Even though the Bank of Canada has kept its overnight rate steady at 2.75%, borrowing costs are still relatively high compared to pre-2022 levels. This environment is pushing homeowners to make some tough financial decisions.
Janine, that's right, Steve. The survey shows that 73% of respondents are preparing to cut back on discretionary spending. Additionally, nearly one quarter are reassessing their overall financial strategies. It's a time of adjustment for many.
Steve, and it's interesting to note that 75% of renewing borrowers are opting for fixed-rate mortgages, according to TD's Vice President of Product Management, Patrick Smith. They seem to value the stability that fixed rates offer in terms of predictable repayment amounts.
Janine, stability is so important during uncertain times, Steve. But it's not just about renewals. Prospective buyers are also feeling the pinch. Over half of them are cutting back on non-essential spending to save for down payments or other home buying costs.
Steve, exactly. And 31% of prospective buyers are considering liquidating assets like tax-free savings accounts or registered retirement savings plans to fund their purchase. The financial landscape is definitely influencing how people approach homeownership right now.
Janine, it's crucial for listeners to assess their own situations and explore all available options. Whether it's for a renewal or a new purchase, understanding the current market dynamics can help in making informed decisions.
One of the big stories this week is the Bank of Canada's decision to keep its key interest rate steady at 2.75%. This is causing quite a stir for homeowners and potential buyers trying to figure out their mortgage plans.
That's right, Steve. The Bank of Canada cited unusual uncertainty around inflation and ongoing trade tensions with the United States as reasons for maintaining the rate. While keeping the rate steady might seem like a relief, it actually complicates things for many people.
Exactly, Janine. As Erica Alini pointed out, this rate hold doesn't offer much help to homeowners facing a significant increase in their mortgage renewals in the coming weeks. Despite the gap in rates narrowing over the past year, homeowners still have some tricky math to work out.
And for first-time homebuyers, the announcement isn't exactly encouraging either. Salman Faruqi mentioned that many of these buyers are still waiting on the sidelines, hoping for a sign to enter the housing market. Some experts are hopeful that the market might heat up later this year if more rate cuts happen.
Speaking of potential changes, there's also talk about the federal government's plan to offer a GST rebate for first-time buyers of new homes. However, some builders argue that this rebate won't significantly impact affordability, especially in markets like Toronto and Vancouver.
Yes, Steve. Shane Dingman reported that the rebate would apply to homes under $1 million, but critics say this doesn't reflect the high prices in these cities. It's also interesting to note that the rebate could benefit investors more than first-time buyers, as it might drive prices even higher in some markets.
That's a key point, Janine. The share of new home sales going to first-time buyers has shrunk because investors have dominated pre-sales over the past 15 years. This rebate might not make a significant dent in reversing that trend.
And there's the topic of downsizing, which many see as a way to simplify life and reduce costs. But as Katria Bolger highlighted, downsizing doesn't always lead to fewer problems. For example, unforeseen financial costs and lifestyle challenges can arise.
Michelle Thorne's experience is a cautionary tale. She downsized from a 4-bedroom house to a 3-bedroom townhouse, only to find it wasn't the right fit for her lifestyle. She eventually moved again to a quiet 2-bedroom bungalow.
It's a reminder that while decluttering and reducing space might seem appealing, it's essential to consider how these changes align with your current lifestyle and future needs. Downsizing isn't always the best option for everyone.
Now, let's shift our focus to the latest employment figures in Canada. The unemployment rate has hit 7%, the highest since 2016, excluding the pandemic years. However, the job losses were softer than expected, which has led markets to trim the odds of a July rate cut from the Bank of Canada.
That's an interesting development, Steve. The labor market showed modest gains with an increase of 8,800 jobs in May. But it's the balance between full-time and part-time positions that caught my attention. 58,000 full-time jobs were added, while 49,000 part-time positions were lost.
Right, Janine. It seems that the market's response was driven by the fact that the unemployment rate ticked up by 0.1 percentage points to 7%. It was expected that there would be job losses, but the employment numbers stayed slightly positive.
And it's worth noting that certain sectors saw significant changes. Wholesale and retail trade positions saw an increase of 43,000 jobs, while the finance, insurance, real estate, and rental and leasing sector added 12,000 positions. However, public administration employment declined by 32,000 as temporary election positions were no longer needed.
Those industry shifts are quite telling, Janine. And while the employment rate held steady at 60.8%, there has been virtually no employment growth since January, according to Statistics Canada.
It's a challenging time for many, Steve. Leslie Preston from TD pointed out that the impact of U.S. tariffs is evident in the industry and regional patterns. Also, average hourly wages rose by 3.4% year over year in May, matching April's pace of growth.
And south of the border, the U.S. employment numbers were released, showing a slight increase of 139,000 jobs, which was slightly above economists' forecasts. Their unemployment rate remained unchanged at 4.2%.
Economists are suggesting that the weakening trend in employment might lead to future rate cuts by the Bank of Canada. BMO's Douglas Porter noted that the manufacturing sector is under intense strain due to trade uncertainty, and the rising unemployment rate is a sign of that pressure.
That's a possibility, Janine. While May's mixed report doesn't give a definitive signal to the Bank of Canada, the increasing jobless rate could keep them in an easing mode for the second half of the year. CIBC's Andrew Grantham also believes that further rate cuts, along with improving trade conditions, will be needed to stabilize the job market.
It's clear that both economic and trade policies will play a crucial role in shaping the future of Canada's labor market. For now, we'll have to keep a close eye on how these dynamics unfold.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.